Good morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew. Summer's here.
Well, sort of, yes. Well, maybe not in Australia, but in other parts of the world.
Sydney's got some sunshine.
At last, yes. Australia, RBA last week kept interest rates on hold.
Yep.
The feedback out of it was very vague from the governor about what the next move will be.
Vague, all right.
The labour market is still strong. We've got twin surpluses on the current account and trade, which indicates a strong economy.
Yep.
Interest rates at 4.35%. Inflation running between 3.5% and 4%. You would think rates need to be higher to rein that in.
25% probability by September that you're going to see a rate rise. That's what the analysts are saying. And I think many traders are probably of that mindset, Andrew. So, you know, what that impact is naturally to Aussie dollar, and is it going to trend higher from here? That chart really does tell a lot of stories, and for everyone out there, you really should study it, not only if you're in domestically looking at it from Australia's standpoint, but it's a very hot traded currency, being the Aussie dollar, versus all its different pairs. And that tells you unemployment rate, it tells you participation, and it tells you employment change. So really, just spend 10 seconds on it, take a photo, and just see over the long run since 2014 how that's transpired over that 10-year window. Unemployment rate has really crunched down. If you're looking at where it was in 2014, Andrew, at 6, now it's that 4 handle, and we were down to the low 3s. As far as percent.
That's right. Strong market.
And so business has got to be up in the sense of turnover and naturally GDP. And the other side of it is you've got all those extra people entering the workforce in that 10-year window.
Yeah, correct. And strong immigration policy as well.
100%.
Underpins the whole thing.
Yep.
Let's move over to the UK. GDP numbers out, came in at 0.4%. They were expecting 0.1%, so a pretty good number.
It was. I think it hit everyone by a little bit of a surprise. There were traders again were thinking, are we going to fall into a negative territory? But it bounced to the upside, and that's a good sign.
Yeah, for sure. Now, the Bank of England kept rates on hold last week. They did indicate that the next move will likely be a cut, and potentially in a couple of months' time. Now,
you could see successive. I wouldn't be surprised, but we'll wait and see.
Yeah, so inflation there is still not as low as what they want it to be, but it is still trending lower,
yes.
Which is a good sign for potential interest rate cuts. Average weekly earnings holding up reasonably well. So there seems to be maybe a bit of light at the end of the tunnel in the UK.
Hope so. You're coming into summer, so hopefully, again, that word of hope, but tourism dollars very hot over there in that June, July, August. People travel to the UK and they really enjoy it. So all of that influx as far as tourism dollars are going to be helpful. And yeah, I think it could be on a little bit of a bounce to the upside. The FTSE, the FTSE, the UK stock market at all-time highs. It was all-time high yesterday.
That's right. Looking at the pound, obviously hanging around that 125 mark. Potentially a bit of weakness there if they do cut rates, obviously.
Yep. It's been an okay market to trade this year. You've seen a bit of market, a bit of movement, but nothing dramatic like we've seen in that compared to what we've seen as far as pound versus yen. But it's been a good market to trade.
Yeah, for sure. Quickly over to the US, consumer sentiment, the Michigan consumer sentiment numbers came out.
Yep.
Came off quite a bit, which is sort of interesting. We're just getting at the back end of the earnings season now. Obviously, the tech companies did very well, the banks did very well, but some of those
there's a lot that didn't do very well.
Yeah, the consumer discretionary stocks like your McDonald's, Starbucks, Pepsi, they all came out. Their numbers were okay, but the discussion around it from those companies was they can see that consumers are pulling it back a little bit. So
they're having difficulty with the cheap meals and all of ththose sort of things, and and even the cost of coffee. So yeah, Starbucks will feel it. It's a discretionary spend versus an Uncle Joe out of the what was the International Roast and
Nescafe.
Nescafe. Well, it's probably good coffee, but all those discretionary points in there. That's where you feel it. Yeah. They're the first one. It's like personal trainers. I love talking to those guys because you just and the ladies, they're personal trainers at the gym, and I say, how you going? And they can tell you bullet point, bang. Oh, turnover's down, or the less people are asking for our service, quite simply because it's discretionary.
That's right. Yep. People have to rein it in at some point.
Yep.
And just finally, just to wrap things up, just looking at the S&P year to date, Real estate down, consumer discretionary basically flat, but unsurprising, comms, energy, tech still performing well.
Yeah, you bet. I mean, they're very strong numbers. I saw some numbers yesterday that we've seen for the first 4 and a bit months, nearly 4.5 for the S&P and the Dow. I mean, I think the S&P's up 9% for the year to date, and we're only 4.5 months in. So yeah, you keep on telling me about the S&P. I've got to agree with you. But when you're looking at the likes of real estate there, it's coming under some massive and consumer discretionary as well, as we just highlighted. They're really coming under some pressure. The real estate sector's imploding.
Yeah, it'd be interesting if that's related to the COVID and work from home and not people not coming back into the office.
Oh yes.
All of a sudden, is there a whole heap of corporate real estate or corporate buildings people aren't coming back in?
Well, you're not earning revenue out of them.
That's right.
So you say to yourself, well, I used to earn, it's a 4% yield, now I'm earning 0. Is it worthwhile holding it? And who wants to buy it?
I know. But yeah, it's a sort of interesting chart. But once again,
maybe we should pull that one apart. There might be something on our dear friend's what's the...
Visual Capitalist.
Visual Capitalist.
Yeah, I know.
I'm sure they'll have something on real estate.
Yeah, well, one of our favourite sites. But yeah, it's interesting. Market still, the US equity market, particularly the big end of town, not only the tech, but
up
the big
10%.
end of town, holding out very well. Those small to mid caps are still struggling a bit.
Russell 2000's having, we might pull that one apart one day, maybe in the next 2 weeks. The Russell 2000, which is a very broad composite of 2,000 stocks, versus the Dow, which is 30, S&P 500, which is 500, and the NASDAQ, which is 100. So it's just, side by side, a real good comparison.
Yeah, and you see that. You can just look at the ETFs on those 4 indexes, and it's obvious.
Daylight second.
Where your money should be. Anyway, we can pull that apart next week.
Yep.
All right, Pete.
Well, and there comes the next part, as far as if those companies aren't getting the performance, of which they're not, then someone's working for them, and they're the real employers of the great heartland of America. 50% plus of the employees work for those small companies.
That's right.
And so if they're going to tighten their belt, what's going to happen to the consumer later this year?
Yep, and does that then affect the employment market as well? So,
well, you would think so, because someone's got to ratchet up and say we're hiring, not firing.
That's right. Yeah, plenty to keep an eye on.
Oh yeah, how many months? Well, today's the 13th or 13th, I think, isn't it, of May?
May, yeah.
We're up to 5th of November, so we're less than 6 months from the election.
And then, interestingly, there hasn't been a lot of talk about that in recent weeks. There was probably a month or two ago, and all of a sudden it seems to have settled down quite a bit. But obviously that will ratchet up in the coming months.
You would think so.
And come November,
it'll be a hot August.
Come November, we'll be sick of it. So
yeah, it might be a red October.
Yeah, that's right. Good stuff. All right, we'll regroup next week.
See you, man.
Thanks, Pete. And that's the XM.com weekly market update.